Welcome to the final working day for this week. But just before you take that break and head into the weekend, let's do 55 minutes of current and relevant business conversation that will guide your economic decisions this week and next week. Good morning. I'm Amy John McQuarrie. Let's get right into it, beginning with what's happening in the global oil space. We can tell you that oil prices rose for a second day on Friday, set for their sixth week of gains, after Saudi Arabia and Russia, the world's second and third largest crude suppliers, pledged to cut output through next month. Brent crude futures for October rose 2 cents to $85.16 a barrel, while U.S. West Texas Intermediate crude for September rose 9 cents to $81.64 a barrel. Yesterday, this price was just at 79. Well, both benchmarks are on track for a 6th week of gains and the longest streak of weekly gains this year. Brent has risen 15.4%, WTI by 18.2% during the last 6 weeks. Saudi Arabia on Thursday extended the voluntary oil production cut of 1 million barrels per day to the end of September. Russia will also slash its oil exports by 300,000 barrels in September, and not 500, which is doing this month. And that's according to its Deputy Prime Minister, Alexander Novak. The Joint Ministerial Monitoring Committee of OPEC Plus is unlikely to tweak its overall oil output cuts at this meeting today. But the extension of Saudi Arabia's reductions and comments by Russia ahead of OPEC Plus meeting have raised supply concerns, supporting prices. However, the latest batch of U.S. data showing a tight labor market and a slowing service sector has triggered some worries that an economic slowdown would curb demand for oil and pressure prices lower, even with the supply cuts. Additionally, the downturn Eurozone business activity worsened more than initially thought in July, and the Bank of England raised its interest rate to a 15-year peak on Thursday. Higher borrowing costs for businesses and consumers could slow economic growth and reduce oil demand. Well, in the oil and gas sector, but back here in Nigeria, as part of the commitment to reduce carbon footprint and in line with the president's directive to provide cheaper alternative fuel to motorists, the Nigerian National Corporation Company Limited, that's the NNPC, has announced a strategic partnership with NIPCO Gas Limited to develop compressed natural gas stations. The Group Chief Executive Officer of NNPCL, Mr. Mele Kyari, said that the collaboration aims to expand CNG infrastructure, improve access to CNG, and accelerate the adoption of cheaper and cleaner alternative fuel for all vehicles.
Once fully operational, the stations can service our over 200,000 vehicles daily, thereby significantly reducing the cost of automobile fuel to Nigerians and reducing the cost of transportation. The project will be rolled out in phases. The first phase, comprising of 21 CNG stations, will support intra-city transportation and be ready by the first quarter of 2024. While the second phase, comprising 35 CNG stations, will support intercity transportation and will be ready in 2024 also. This will be further complemented by the additional 56 stations to be deployed by NNPC Retail across the country. NIPCO Gas is currently operating 14 CNG stations across Nigeria and has converted over 7,000 vehicles to run on CNG. NIPCO's technical competency and field experience will bolster this initiative's success and amplify its positive impact on the nation's economy. This initiative would leverage Nigeria's abundant natural gas resources to bring multiple benefits to Nigerians, including access to cheaper fuel, reduce cost of transportation, reduce carbon emissions, create new businesses, and chains and streams of job opportunities that will unfold.
We certainly look forward to those benefits and hope the NNPCL and NIPCO will fast-track this. It will do us a whole lot of good. We're still talking oil now, but now it's edible oil. Malaysian palm oil futures rose on Friday after hitting a one-month closing low, although forecasts of higher stocks weighed on the contract and set it on course for a second weekly loss. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange rose 38 ringgit to 3,862 ringgit. That's about $849 a metric ton. And by midday for the week, the contract declined 3.6% so far. The Malaysian Palm Oil Board is scheduled to release its data on August the 10th. Daily and most active soy oil contracts gained 0.4%, while its palm oil contracts rose 0.03%. Soy oil prices on the Chicago Board of Trade was up 1.4%. Analysts believe that palm oil may test a resistance at 3,943 ringgit per metric ton, a break above which could lead to a gain into the 3,983 to 4,000 ringgit range. We leave the oil now, go to grain. Chicago wheat jumped more than 2% on Friday with attacks near a key Russian grain port in the Black Sea region, triggering fresh concerns over global grain supplies. Although the market is still set for a weekly decline, corn and soybeans rose with forecasts for cool and wet weather conditions in the U.S. Midwest, limiting upside potential in prices. Ukrainian sea drones attacked a Russian Navy base near the Black Sea port and a major hub for Russian exports early on Friday and were destroyed by Russian warships. Russia's defense ministry made this known to the media. The attack prompted the port to temporarily halt all ship movement, according to the Caspian Pipeline Consortium, which operates an oil terminal there. For the week, corn is down 6%. Soybeans has given up more than 3%, and wheat has also lost almost 9%. Rains in parts of the United States Midwest during the crucial crop development phase are likely to improve yields. Private sales of 134,000 metric tons of U.S. soybeans to China, reported by the U.S. Department of Agriculture on Thursday, renewed optimism around export demand. The flash sale adds to the recent export activity. The USDA reported soybean export sales for the week ended July 27 to 2.7 million metric tons. That's near the high end of trade expectations. Wheat export sales of 421,300 metric tons were in line with expectations, while 456,400 metric tons of corn near the low end of predictions. And Russia continues to export wheat through the Black Sea, adding pressure on prices. Talking about export, but from Nigeria, as part of measures to expand its support base and boost export, the Nigeria Export Promotion Council says it is seeking collaboration of commercial banks in granting flexible financial funding to exporters. The executive director of the council, Mr. Ezra Yakusak, explains that while lack of access to finance remains a huge challenge to the activities of owners of small businesses and exporters, the intervention of banks in the provision of single-digit interest loans is key to expanding the nation's export base. He stated this at a meeting at the Federal Capital Territory, Abuja.
The nation's drive towards the economic diversification is still on as the management of the Nigeria Export Promotion Council continues to meet with key players on how to improve the non-oil sector. The latest of such meetings is with export desk officers from commercial banks due to their role in financing exports.
Access to bank financial services by exporters is one of the major challenges stifling the smooth growth of non-oil export. This is due to high interest rates and low disbursement of credit facilities to finance non-oil export trade. This has ultimately affected the nation's non-oil export performance because most exporters lack the financial muscle required to set up modern export-related industries and ensure production of high-quality products.
The theme for the meeting is enhancing non-oil export growth through effective export procedures, documentation, and logistics. Statistics from the Nigeria Export Promotion Council shows that in 2022, 30 banks participated in the issuance and processing of Nigeria export proceed forms. This led to a total export value of $4.8 billion, the highest recorded since the creation of the council in 1976. Like Oliver Twist, the council is seeking an increase in funding of small businesses.
While I commend some financial institutions for their continuous support to non-oil export business in the country, I also wish to solicit for increased support through the creation of export tailored financial structure that offers greater flexibility and resources to support exporters, especially the SMEs, in order to increase their capacity to export and diversify their export baskets.
Nigeria is endowed with immense potential in some of the world's most traded products such as cocoa, ginger, cashew, soya bean, sesame seed, palm oil, rubber, shea, and gum. The nation's export sector also presents great opportunities for more Nigerians to participate in the global market space.
Well, a lot of things to deal with if we are to boost our export, especially when we look at agricultural crops, which we have in abundance, or we have the potential in abundance. Yet we keep talking about issues such as that, which NEPC is trying to solve, getting a single-digit interest finance for exporters and all the infrastructure challenges they face. But even looking backwards and talking about the issue of post-harvest losses, which reduces our production by as much as 60%, is an issue that has been discussed year in, year out. Crops like tomato, vegetables, horticulture. We've seen all of this suffer post-harvest losses, and it seems that the solution keeps eluding Nigeria. I wonder what we're doing wrong or what we're overlooking. Well, perhaps someone here will help us to see through that. Mr. Omololu Ogumade, the Managing Director of Food Crowdy Agrotech Farm to Fork Division. He's here with us in the studio. Mr. Ogumade, thank you so much for your time. Good morning.
Thank you. Good morning.
So for many years, and it's something that we still keep talking about, the issue of post-harvest losses, it just reduces even attaining food security in the country. Now we have emergency, a state of emergency on food security announced by the president. But as a lot of people have said, it goes beyond the announcement. Exactly. These are some of the nitty-gritty that stopped us from reaching a level of food security, post-harvest losses of about 60%, if not more, What are we missing in all of the conversations and trying to find a solution to this?
Oh, well, there are, different angles to look at it from. But starting from the angle of the government side of things, because, of course, government runs the policies that determines what happens in any sector of the economy. So we have a tradition in governance that makes things get done the same way with each government coming in, even though they come in with promises to do things differently. But because the bureaucracy is set in a certain way, you find out that there's a lot of repetition of the old practices, and we just seem to go around in circles and we don't move forward. So we're hoping that this new government, having declared this emergency, can do things differently. Now, going to the problem itself, it's a disaster when over 60% of our produce gets wasted along the way, and there are different points in the value chain where the wastages come into play. But there are three different areas we want to look at. We want to look at, and it's like the same problems we talk about when you talk about Nigeria. You're looking at the power sector, you are looking at logistics and transportation, you are looking at education across the value chain, from the farmer to the off-takers, which are not even enough in terms of we don't have enough off-taking of the produce once the farmers get them out of their farms. So if there's nobody at the farm gate ready to off-take, whether it's a government agency, whether it's a private business like ours. Now, in our case, Food Crowdy, the Farm to Fork division, which I lead, is meant to take those same produce and put them at your table, the dinner table, the kitchen table, at the best prices, with the best quality of freshness and all of that. but where there's a lot of wastage along the line.
What's your challenge in getting to the gates, the farm gate,
Exactly.
to get it? What
So
are your
we
challenges?
have majorly logistical problems in the sense that you have a transportation system that has to ride on the existing roads. And we all know that the existing road network, one, is inadequate. Two, the roads that are available are practically almost non-motorable when you look at particularly heavy lifting. Because if you're going to get produce in bulk, then you're looking at heavy lifting. So the government in this emergency declaration is talking about using more of rail transport for food, which is why I said, hopefully, if they can get that done, then we can start to see some changes.
But that's a long term.
Exactly. So the easiest thing to do, which is like medium term, short term, medium term, is to really, really focus on road development. New roads, particularly into those farming communities, and maintaining the old roads. And right now we're in the rainy season, and that is exposing the quality and the viability of most of the roads we have right now. The roads are getting worse.
What about getting the processing facility close to the farms?
Yes, even if you're going to do that, you're going to move a lot of the things that you are going to use to build those facilities from the ports, because majority of those items are going to be imported. So you're going to move them from the ports to those localities. So you're still going to face those logistics challenges. So which is why at the end of the day, everything becomes more expensive for the consumer. Because at the end of the day, every added cost along the value chain is transferred to the end user. So our challenge at Food Crowdy Farm to Fork Division is to keep re-innovating and becoming more and more creative to still get those things to your table at the best prices possible. So it's a major challenge.
And retaining the freshness.
And retaining the freshness.
Because that's the ingredients that people need for their bodies. So
exactly.
If it gets lost, like I remember the attempts to export yam that was rejected because by the time it got to the destination, it was already bad.
Yes, and then we also have situations where to preserve some of those produce, we're using pesticides, chemicals that in most of the Western areas we want to send our food to have now been declared unfit for human consumption. So there's a challenge in that area too. So, there is a lot in that value chain that needs to be looked into and worked on. So the hope is that, because we're being told that this government is a government that believes in technocrats and bureaucrats working together, we need to get experts in these areas to advise government.
Yeah, so other than the government, because, it doesn't look like we can survive depending on just the government. The private sector has to.
Yes.
So issue of preservation and storage, it could also be a source of revenue for some entrepreneurs.
Oh, that's true. That's true. You see, that's why okay, let me go back to this. The agribusiness sector in Nigeria is estimated to have within itself upwards of $9 billion possible revenue generated annually. $9 billion. So, and what you just said is just one of those verticals in that space. So if you have...
Is it being explored?
Well, we have some people who are getting into it. Part of what we are doing in Food Crowdy, we have several divisions and we want to invest a lot in technology to do that. Like last weekend in Benue State, in Makurdi, we launched the Seawin app, which is an app that is targeted to get cashew nut farmers, particularly, and other farmers to be able to find better seedlings to help them with better produce, production, better volumes, and then, of course, better profit at the end of the day along that value chain. But then, such people as what you just mentioned, people who can come to help in preserving the produce with some form of advice, technology, chemicals, and other forms.
So this
there's a space there that people can tap into.
Is beyond the community people, because a lot of the farms are obviously in the rural area, so you have more of the community residents. So this will require people who have huge capital, people who have the technological know-how, and innovation to be able to preserve this thing. So
yes, you see, but really you don't. Depending on the scaling you want to do, you don't necessarily have to have so much money, because we can actually have a group of investors come together to take these things at different levels of that value chain and operate at different levels. Inculcating the communities themselves, the farmers need to be educated because a lot of them, the wastages start from the farmers themselves because of lack of adequate knowledge of what to do. Now, they know what to do to get the produce out, but thereafter, what do I do to keep the produce fresh enough for the off-takers to come? So, in those days, we used to have a very vibrant Agric Extension Officers Network who worked majorly with the local governments. But now, the local government structure is more or less moribund. So I don't know if we still have that quality of service in terms of farm extension workers going into those communities to sit with the farmers and educate them on what they can do at their level, whilst these other investments and whatever governmental agencies from maybe the state and the federal come in to close the gaps. So there's a lot, that value chain is so wide that there's a lot of places
So that's another area for
investments can plug in. Yeah.
All right, thank you so much for coming on the show, Mr. Omololu Ogumade, for exposing that investment. Who knows, maybe an investor is watching and ready. You've been looking for where to invest your money, perhaps. In the area of storage and preservation of food crops, especially in the rural area close to the farms, might be one area that maybe we want to be looking for. That's why you watch Business Morning. But thank you so much for your time this morning. All right, let's take a break and we'll also bring you that story where Verve has launched a Good Life promo. Find out what it's all about. Perhaps you might be able to benefit from it.
Free school fees, 6 months electricity bills, as well as 200,000 naira worth of shopping spree.
As the brand that is committed to bringing you the good life, we are, in collaboration with our partners seated here with us today, positioned to offer a season of refreshing when it matters most. Hence, this year, the Verve National Consumer Promo is particularly focused on easing the burden of Nigerians.
At Verve, we have always believed in the power of the ever-expanding community, and this promo is a testament to that belief. As we navigate through challenging times today, it becomes more crucial than ever to stand together, to support one another, and to offer a helping hand whenever and wherever possible.
And then the official launch of the promo.
A chance to transact and experience the joy of winning. Whether it's a free rent or a cozy home, free fueling of your car, hassle-free school semester funding, uninterrupted power supply, or the excitement of a shopping spree, the Verve Good Life 4.0 promo has got you covered. Join us to experience the good life with Verve.
This promo is open to all Verve card users, giving them the chance to win exciting prizes when they transact at least twice weekly with a Verve card on automated teller machines, that's the ATMs, point-of-sale POS terminals, and online platforms.
The promo is open to all Verve card holders, right? And what does that mean? So it's possible that, some people don't have Verve cards today, right? And there's no need to worry. If you don't have your Verve card today, you can, go to your bank or to any, to the nearest bank close to you and ask for a Verve card. Once you have your Verve card, you are good to go.
Verve says the promo will run from August the 3rd, 2023 to January the 31st, 2024.
Welcome back. That's for Verve customers or potential customers. Now, I'm talking about financing and innovative financing for that matter. Let's turn our eyes to our homes or houses, real estate. If you don't have a place where you lay your heads, I'm sure you won't be as composed as you are. I know I would not be. So now let's find out what's going on in that space. We don't need to say that, emphasize it. The issue of insufficient housing stares us in the face everywhere we turn. And these days, with prices skyrocketing, inflation hitting everything, I've heard a lot of renters talking about how their rents have increased. But let's find out the innovative financing going on in that industry. That's the real estate industry. And joining us for that is Mr. Ayo Olanrewaju Kuyebi, is a Managing Director, Chief Executive Officer of GMH Luxury. Joins us virtually from Lagos. Thank you so much, Mr. Kuyebi, for your time this morning.
Good morning. I'm grateful for you.
So do we have, do we have any innovation, something new when it comes to financing in the real estate? We've seen mortgage. We don't know how popular or accessible it is when you talk about Nigeria, but take us through some of the innovations that have happened in the area of financing models in the real estate industry.
Okay. So basically, I think Nigeria as a country, we are still lagging behind when it comes to innovative financing of real estate, and it's one of the inherent challenges as far as housing deficit is concerned in this country. And that is why for every 1,000 Nigeria, it's only 23 out of that own a house. And that's when you compare that with what South Africa and Kenya is doing. You have 690 out of 1,000 South African owning a decent accommodation, and 750 out of 1,000 for Kenyan citizens. The Nigeria housing deficit, the government still needs to come and play a bigger role here. As at 1991, the Nigeria housing deficit is put at 7 million. And in 2007, that rose from 7 million to 12 million housing unit deficit. In 2010, it became about 14 million. And today, we are looking at 22 to 28 million. That means something is actually fundamentally wrong as far as real estate is concerned in this country. And if you look at this, there is no way, if we continue on this trend, we'll be able to bridge that housing deficit gap. So, so how can we come out of this current situation? In 2018, the value to turn around our housing deficit was put at 21 trillion as of 2018. That means today is times 4 of that figure. And, you know, the government under FMBN, the Family Home Fund, and the National Housing Program, in 8 years, they were only able to deliver about 23,000 housing units. That's just a drop in an ocean, if you ask me. And year in, year out, as of today, before now, year in, year out, we deliver about 100,000 units, year in, year out. But as of today, it's less than 10,000. And what does that tell you? Real estate is just, it's beyond the brick and mortar. It's more finance. And there is nothing innovative as of today as far as real estate financing is concerned. Yes, there were a bit of improvement. FBN has done a market to capitalization from 2.5 billion to 500 billion. But if you look at the need and where FMBN is still very far. If you increase their single obligor from 15 million per individual to 50 million, it's also a progress. Now, the real estate companies can actually approach the money and the debt market to raise finance if they have investment grade rating. That's also a step in the right direction. But even the funds that are available, are they suitable for real estate?
What do you mean, are they suitable for real estate? What do you mean by that?
So what I meant by that is the fact that the easiest and the quickest fund you can annex, if you have an investment grade rating as a real estate company, is what they call is the issuance of CP, commercial papers. And that is just 270 days. What can you do within the space of 270 days to pay back? The turnaround time for a commercial paper is 270 days. And now, as a result of what is happening in the economy, the naira devaluation, the inflation, the low purchasing power, the low purchasing power has actually drastically reduced the patronage of the real estate sector, and that has actually made a lot of real estate sector to default, even in their obligation to the banks and to the commercial in the financial space, and that makes the access to suitable finance even more difficult as of this time because of the series of default that has been experienced by the players in this industry. So for me, what I think is actually suitable is to look at what Indonesia is able to do differently in terms of housing, in terms of in terms of solving the problem of their housing deficit. In 2019, 1/5 of total population of Indonesia, they live in slum. And what did the government do differently? They actually put a plan in place to deliver over 1 million housing units, affordable housing units, year in, year out. And if you look at what they were able to do, they were in 2015, they were able to deliver close to 700,000 in just 1 year. And in 8 years of a government, of this past administration that promised 1 million housing units year in, year out, they were only able to do 23,000 in that space of that year.
All right, Mr. Akiebe, let me just draw your attention to something you said. You brought about the example of Indonesia and how they were able to provide affordable housing. And we know back here, we heard a lot of policies, pronouncements, and even the houses that government has gotten into, and they call it affordable housing. But I guess the definition of affordable is what we should also look at, because I've also had to challenge some people who are in the build industry about the issue of affordability. And they tell you, well, the building materials are not cheap, so how do you expect the house to be cheap? Because if you're looking at affordable for an average Nigerian, I mean, the price is obviously not what is being put out there for what the houses that are called affordable.
Okay. So to make housing affordable, I think still talking about what Indonesia do differently. What they did is to set out about over $1.5 billion to cushion the effect of housing deficit, and part of this goes directly into construction by their development unit, and as well as providing a subsidized loan to the private sector. So when you do that, so let's compare that to what is actually happening in Nigeria at the moment. For you to be able to have an access to finance now in Nigeria, you are looking at 28%. How can housing be affordable? It can never be 28% loan per annum. You are looking at increase in development permit year in, year out by even the Lagos State. How can housing be cheap? I remember an approval we did in 2020 compared to the same cost of approval this year is over times 500%. How can housing be affordable? When you look at what Naira is 2 years ago to dollar and what Naira is to dollar today, how can housing ever be affordable if government is not really paying attention to this sector? And it's a proven fact that the prosperity and the health of any economy is judged by the performance of its housing sector. And, it's also a fact that a man is never a man until he's able to own a house. And you have just 23 Nigerians owning a house out of every 1,000 Nigeria. So it shows that housing is not affordable. And except government is able to do their bit, housing will continue not to be affordable, and the gap of our housing deficit will continue to widen. So, what can actually solve this problem is to put a policy that works in place.
Are you saying we don't have the policy, or is it the implementation of the policy?
Nigeria has one of the robust policies when it comes to housing, but the implementation of those policies. And if our need to bridge the gap of housing deficit is, as of today, is over 40 trillion, how can FMBN, Federal Mortgage Bank of Nigeria, that's supposed to champion the affordable housing, will be capitalized at 500 billion? So what are we doing exactly? We cannot come out with all these parameters in place. We cannot come out and set these parameters in place. And the likes of the Bank of Industry, the CBN Intervention Fund, and all of that, they are channeled towards commercial building. And as of today, the deficit we are looking at is actually for residential purposes. And if you look at the deficit in question, the low income housing actually takes about 60-70% of that need. And even the housing that are provided today by the government, are they equally affordable?
All right, Mr. Akiebe, I mean, just before we let you go, because we're almost out of time, yes. Some people will say and paint the scenario. For instance, if you stay in Lagos, I know you're in Lagos, so I mean we can share this perspective. If you go to the island, you see huge buildings that are untouched, unused, you know, and they belong to people. Some are even still being built, and by the time they are done being built, they are just left there. Obviously, if you get close to those buildings, the prices will scare you away. How can we find a balance? There are so many people who are homeless. The need for houses is, you know, in trillions. And yes, you do have some of these buildings, you know, that should be housing human beings lying fallow and deteriorating.
So that is evident in the purchasing power of people, of us as a nation. And houses in those areas will continue to be very expensive and beyond the reach of common man. And the reason is not far-fetched. What is the travel time today between our suburban center to the urban center? From Agege to Ikoyi, what is the travel time? It keeps increasing year in, year out. If you have to move from Agege at peak period to Ikoyi or VI, you are looking at 2.5 hours in your hand. Governments are not being responsive. We move beyond being proactive now. We are talking about the responsiveness of government. What is the travel time between Ikorodu to VI? What is the travel time between Badagry to CMS? So those are areas where land is relatively cheap. But what is the connection between these places and the urban centers? So that is why the urban centers will continue to be crowded and the property value will continue to soar beyond the reach of common man. So government need to step in by providing infrastructure facility, by enhancing by enhancing transportation system that can move people from point A to point B without wasting a lot of productive time in so-called man-made our self-inflicted traffic. Because I believe the traffic we are currently facing in Lagos, moving from the suburban to the urban centers, is actually self-inflicted. And it's because government is not doing enough in terms of creating infrastructure facility to be able to support the population implosion. And this is being, we are moving from a very bad to a worse situation as far as infrastructure deficit and housing deficit is concerned as a nation. And I'm actually alarmed. And this is a sector that has a very huge potential to even turn the economy of this country around. We are talking about youth unemployment, great youth unemployment. The largest employer of labor today, apart from the government, is still this sector. And this sector, you know, the engagement, the employment level is from this unskilled.
It was the agri sector. I thought it was the
value chain of construction.
I thought it was the agri sector, Mr. Kuyebi. Well, every industrial player is claiming that its sector is the largest
construction
employer of labor.
Sector actually. Maybe because more present agri sector is trying to catch up with the construction sector.
Oh, really? Okay.
Yes, actually.
Okay, all right.
It's this construction sector.
If you say so. Mr. Ayolarinwaju Kuyebi, the Managing Director, Chief Executive Officer of GMH Luxury. Thank you so much for your time this morning.
I'm grateful. Thank you so much for having me on your program.
Yeah. All right. From there, now we head to the market, and we know that it's a season of earnings reports, corporate earnings, as we've been seeing this for a bit. Let's look at just a couple of them, and then we will dwell a little bit on a not very pleasant news which we had yesterday. So if I could have those corporate earnings, the corporate earnings for Transnational Corporate PLC, the corporate earnings of Transnational Corporate PLC, if I may have that. Yeah, there you have it. These are part of the earnings. So we decided to do two companies. As you know, we always, time is not really our friend on the program, every live show. This is good news. This is good news. When we look at Transnational Corporation PLC, seeing the highlights of the results now, we see its profits was up about 48% when you compare 2023 and 2023. So in the midst of things not looking so good, we still see that the Transnational Corporate PLC is doing good. Revenue was also up 27% compared to the previous year. And shareholders, if you have a share there, we'll tell you a little bit more about that share. If you had a share, you have just, I know you have collected that money, 518%, more than 518% increase. You know, and we can also tell you that on Wednesday, Transco was the most traded stock by volume at 58.83 million units. We also have FB, and then we saw that the group's total revenue for half the year ended 2023 was 82.1 billion compared to 62. There was increase in operating income by 46% from 20.5 billion to 29.9 billion. Operating expenses too, we expect that to also go up, an increase of 40%. The cost of operating any business now has also gone up. But the good thing is that in spite of all of this, we saw the company Transnational Corporation PLC doing well and coming up tops, and investors smiling to the bank. Perhaps this is an attraction for you. Well, we're looking for how to grow the NGX. Now, let's look at that other company. Not very good news in this case. I know that a lot of us saw that story yesterday about GlaxoSmithKline Consumer Nigeria PLC. But first of all, let's look at their numbers for the period ended June the 30th. We saw their gross profits go from 2.79 in 2023 down from 3.74. See the difference there, almost ₦1 billion. And this is not taking into consideration some of those other nitty-gritty that are in there. And then the profit for the period went from 349.4 million, no longer in billion, now in million, to 339.7. And so this is perhaps some of those factors that they had to consider. Yesterday, we saw that statement. If we could have that statement from GlaxoSmithKline, there you have it. It says that in our published second quarter results, we disclosed that the GSK UK Group has informed GlaxoSmithKline Consumer Nigeria, that's the Nigerian arm of it, of its strategic intent to cease commercialization of its prescription medicine and vaccine in Nigeria. Having companies like this exit the country is not good when we are talking about revenue for the country. They pay taxes. This will be affected. I mean, employment of Nigerians in this company. And the part that I know will really concern you is the issue of the shareholders. What's going to be their plight? Well, they said the board is conscious that shareholders will have many questions, obviously, and they said they've been working assiduously with professional advisors to agree on next steps, and they will be shortly submitting to the Securities and Exchange Commission a draft scheme of arrangement which may, if approved, see shareholders other than GSK UK receive an accelerated cash distribution and return of capital. A sad news indeed. A lot of the home use and, common medicines and stuff that we use in the homes are made by this. So what's going to happen to that? Not looking very good. This is sad news for the country, for our corporate environment and the economy right here in Nigeria. And so let's look at other sentiment in the market, looking at the numbers from the NGX yesterday. We saw the market was good, almost 0.5% up at the close of trade. We celebrated the return to 65,000 level. Equity cap at 35.5, looking good. Total volume traded was up also 34.6%. Let's see the activity charts, okay? So there you have it, to 445. Value was also up, and deals also exchanged. The most traded stock by volume was Sterling, Nigeria, and Accessco also did good there. There you have it for that. So obviously the banking was up. The Fugas led the gains right there. Consumer goods, I think Dangote Sugar contributed a whole lot to that. A marginal gain for industrial good insurance, quietly coming back up. Oil and gas, we saw that. We think is profit taking because we've seen many days of bargain hunting and skyrocketing. The price of petrol obviously is affecting the removal of a subsidy. Now let's move over to the fixed income market and see how those numbers are the top trade. Thank you so much. There you have it. Federal government bonds for yesterday had 49 deals worth 41.97. Now we notice that March, to the security that is maturing next year, March, got the most attention, 18 deals on that alone. Let's see the CBN. Okay, Omo was quite quiet. I hope we'll have a guest help us understand that. No movement at all for that. Okay, then we have the CBN bills. CBN bills had 45. And you had the September. This is mature. Remember the short-term securities are getting a lot of attention. The September 2023 had 42 deals right there worth 27 billion naira out of a total of 45. These are the most traded. That's why it's 44 and 45, valued at 31.6. Now let's have Favor join us and help us understand some of the observations that we have from the fixed income market. Hi, Favor. Good morning. Good morning, Favor. Okay, can you unmute, Favor? Maybe that's why I can't hear you. Okay, all right. I think we lost Favor there. But let's move on now. We have the Treasury bills also. We also had the July 2024 catch a lot of investors' attention yesterday with 25 deals for that alone. And it's worth 30.54. I think Favor is back. Favor, are you back? Can you hear me? Hello, Favor. Okay, doesn't seem like we have Favor. Let's move over to the unlisted market. There you have it there. We know this is the second positive trade that the unlisted market is having. I'm happy. I'm happy for them at least, and they're still retaining the 1 trillion naira, 1.13 trillion naira as the market cap after increasing by almost what we had for the NGX. You notice 0.47. We had 0.48 for the NGX 800. 113.48 there, right? Correct. Let's see those who move the market. Okay, there you have the volume. There were 14 deals at the unlisted market yesterday. 5 stocks were traded, worth 15.59 million, and the volume was 1.20 million. Can we say the stocks that were traded at the unlisted market yesterday? Doesn't look like we have that now. Perhaps we have to switch over to what's going on at the crypto space now, since we're not able to get Favor back. I hope we can have her in future. It would be nice to know what investors look forward to. We saw almost no deal at all, and then we saw in some of that the CBN one, and it looks like the short listed securities are the ones getting attention at this time, the September and the March of 2023 and 2024. All right, so now let's switch over and head to the crypto space, and that's where we see, well, for a change, even if it's slight 0.38 in the price of cryptocurrency, we see that Bitcoin is up 0.28, and its dominance has also increased. It's now gone up to 48%. Ethereum is, however, not recovering yet, still slightly down 0.04%, 1,835.33 there. Let's look at the prices and hope we can get Solomon to, there you have it, it's neutral. Friday normally is red, but it doesn't look so red. It's neutral there. And then Bitcoin, we've seen that. We've seen Ethereum, which is down, and then BNB. But we have Solomon joining us now. Hi, Solomon. Good morning.
Good morning, Ini. Good morning.
Yeah, good to have you, and good to see that recovery from on Bitcoin.
Yeah. It's really, really cool. It's really cool to see a recovery.
Do we know what brought about the recovery?
Yeah, basically, Bitcoin is still retesting, and we are working on retesting about $30,000. So there's a very huge support at 28,500 and 28,800. So far, so good. We've been unable to break through that support. So I will be expecting to go up to about $30,000. So basically, nothing has really changed in the market. We are still looking at testing $30K. Unless we go below 28,000, that's when we are facing a downtrend again.
All right, and then we hear that Bitcoin miners need a Bitcoin price to be above 98,000 after halving. Why do they need this much? Well, even though I think it would be good for investors.
Yeah, so basically, when we talk about the miners and halving, the miners they make their profits from the rewards they get via mining Bitcoin, and what the halving basically means is this reward will be slashed into two. So by next year, second quarter of next year, thereabouts, we should see the block reward for Bitcoin that miners receive being halved. Now, what that means is for miners to be able to stay in business and to be able to cover their running costs, they will need Bitcoin price to hit a particular price. And if it stays at $30,000, miners will be definitely out of business. And we know without miners, Bitcoin will cease to exist. So we need the miners. And basically what that means is Bitcoin price will need to hit a certain benchmark. And the benchmark we're looking at is around $90,000 so that these miners can be able to stay in business. Now, for some of the miners that have gone public, they don't have much issues because they can be able to sell some shares and they can use the funds to keep running their business. But not all miners have gone public. So we still need Bitcoin price to hit at least $90,000 coming fourth quarter of 2024.
Now, with Bitcoin struggling to get back to even $30,000, I'm wondering what can move Bitcoin to above 98,000?
Yeah, it's basically demand and supply. And that is why if you look at the Bitcoin historical chart, you would notice that after every halving, Bitcoin price does good numbers. That's just basically what happens. Once Bitcoin reduces the reward it gives to miners, automatically there will be scarcity. And that's what makes Bitcoin technically deflationary because of the whole supply mechanism and tokenomics. So that is what causes the whole bullish market you hear about. So once we see the halving second quarter of next year, what that means is there'll be lesser Bitcoin being emitted to miners, and automatically that creates scarcity. And when you factor in demand and supply, that will give rise to a price increase.
All right, we'll see how that goes second half of next year. Thank you so much, Solomon Amunde, financial market analyst, for your time this morning.
Thank you. Thank you.
Also, with that halving calculation and a bid to push the price of Bitcoin to 98,000. We say thank you so much for being a part of the program Business Morning for the week. Imagine 5 days already. I hope it was worth your time. We promise to make it better even next week. Even as we draw the curtain, remember you can always watch Business Morning on our YouTube channels. That's the channel youtube.com/channelsweb. Then you see Business Morning. And you can watch it, all the old episodes and information that you missed out. You can be part of it again. I'll see you at 1:30 when we'll give you updates of the world of business during Business Incorporated. You can be sure to get more information right there. I'll see you then. Do take care. Have a great day.